Hold on to your hats, folks, because the Donald is back. Well, maybe. The possibility of a second Trump presidency has everyone talking, especially in India. Why? Because the Indian rupee might be in for a wild ride. News headlines are going crazy. Some say the rupee will crash. They paint a picture of economic doom and gloom, but is it really all bad news? Let's dive in and separate fact from fiction. First, let's take a look at history. During Trump's first term, the global economy saw significant shifts. His policies on trade, immigration, and foreign relations had ripple effects worldwide. India, being a major player in the global market, felt these changes too. The Indian stock market experienced volatility, and the rupee saw fluctuations. But it wasn't all bad. Some sectors thrived, while others struggled. For instance, the IT sector in India saw a boom due to increased outsourcing. On the other hand, export-driven industries faced challenges due to changing trade policies. The rupee's value against the dollar became a hot topic of discussion. Analysts were divided on whether Trump's policies were beneficial or detrimental to the Indian economy. Fast forward to today, and the debate continues. With the possibility of Trump returning to the White House, experts are once again speculating on the future of the rupee. Some believe that his policies could lead to a stronger dollar, which might put pressure on the rupee. Others argue that India's growing economic strength will help it weather any potential storms. It's also essential to consider the domestic factors at play. India's economy is not solely influenced by external factors. Internal policies, agricultural output, and infrastructural developments play a crucial role. The government's initiatives to boost the economy, such as Make in India and Digital India, have shown promising results. These factors could counterbalance any negative impacts from international policies. Moreover, the resilience of the Indian populace and the adaptability of its businesses cannot be underestimated. From small businesses to large corporations, the spirit of innovation and perseverance is evident. This resilience has helped India navigate through economic challenges in the past and will likely continue to do so in the future. So, while the headlines may scream doom and gloom, it's crucial to take a balanced view. The future of the rupee, like any currency, will be influenced by a myriad of factors. By staying informed and understanding the broader picture, we can better navigate the uncertainties ahead. In the end, it's not just about the policies of one leader or the fluctuations of one currency. It's about the collective strength and resilience of a nation. And in that regard, India has always shown its mettle. So hold on to your hats, folks, because the journey of the rupee is far from over. Okay, so Trump's back, people are freaking out, but hold on, there's more to the story.
A new research paper from a top Indian financial institution says, don't panic.
They've been crunching the numbers, looking at what happened the last time Trump was in charge. And guess what? The rupee might actually be okay. In fact, it might not weaken as much as everyone thinks. Remember 2016 to 2020? Trump was president. It was a time of significant political and economic shifts, both domestically and internationally. The world watched closely as policies were enacted, trade deals were negotiated, and economic strategies were implemented. The impact of these decisions rippled across the globe, affecting various markets and currencies, including the Indian rupee. People thought the rupee would tank. Financial analysts and market watchers were predicting a significant decline in its value. The uncertainty surrounding international trade policies, tariffs, and geopolitical tensions contributed to these fears. Many believed that the economic strategies of the Trump administration would lead to a weakened rupee, causing concern among investors and businesses alike. But it didn't completely crash. Despite the predictions and the initial volatility, the Indian rupee managed to hold its ground better than expected. Various factors, including India's own economic policies, global market conditions, and strategic financial decisions, played a role in stabilizing the currency. It was a testament to the resilience of the Indian economy and its ability to navigate through uncertain times. It went down, sure, but not as much as under Biden. Surprised? The comparison between the rupee's performance under different administrations highlights the complex nature of currency valuation. While the rupee did experience a decline during Trump's presidency, the extent of this decline was less severe compared to the period under Biden. This unexpected outcome challenges the simplistic view that a single factor such as the presidency can solely determine currency performance.
See, currencies go up and down. It's like a seesaw. The value of a currency is influenced by a myriad of factors, creating a dynamic and ever-changing landscape. Just like a seesaw, there are constant movements and adjustments, reflecting the interplay of various economic forces. Understanding this concept is crucial for anyone looking to grasp the complexities of global finance. Lots of things affect it, not just who's the president of the United States. Trade deals, interest rates, and economic policies all play significant roles. For instance, a favorable trade agreement can boost investor confidence and strengthen a currency, while changes in interest rates by central banks can either attract or deter foreign investment. These elements work together to shape the financial landscape. Even the price of oil play a role. The global demand and supply of oil can have far-reaching effects on currency values. When oil prices rise, oil exporting countries may see their currencies appreciate, while oil importing countries might experience the opposite. This interconnectedness underscores the importance of considering multiple factors when analyzing currency trends. So next time you hear about currency fluctuations, remember it's a complex web of influences at play.
Here's the thing about a weaker rupee, it can actually be good for some parts of the Indian economy. Think about it.
If the rupee is weaker, Indian products become cheaper for other countries to buy. That means more exports. Indian companies that sell things like textiles, pharmaceuticals, and agricultural products could see a boost. This means more jobs and more money flowing into the Indian economy.
Okay, so a weaker rupee can help exports. When the value of the rupee drops, Indian goods become cheaper for foreign buyers. This can boost demand for products made in India, from textiles to technology. Factories might see an uptick in orders, and shipping ports could become busier with goods heading overseas. This is great news for businesses looking to expand their market reach and for workers who might see more job opportunities. But there's a flip side: inflation. As the rupee weakens, the cost of importing goods rises. This can lead to higher prices for everyday items. Inflation is a complex issue that affects everyone, from the average consumer to large corporations. It can erode purchasing power, making it more expensive to buy the same goods and services over time. This is why it's crucial to understand both sides of the coin.
When the rupee weakens, it doesn't just affect exports, it has a ripple effect across the entire economy. Currency exchange rates fluctuate, impacting everything from travel costs to foreign investments. Financial news channels often buzz with updates, and analysts keep a close watch on these changes. The value of the rupee is a key indicator of economic health, influencing decisions at both the individual and governmental levels. Things we import, like oil, become more expensive. India imports a significant portion of its oil, and a weaker rupee means paying more for this essential resource. Higher oil prices can lead to increased transportation and manufacturing costs, which can trickle down to the prices of goods and services. This is why fluctuations in the rupee's value are closely monitored by industries reliant on imports, and electronics become more expensive. Many of the gadgets and devices we use daily are imported. A weaker rupee can make these items pricier, affecting consumer spending habits. People might delay purchasing new electronics or look for cheaper alternatives. Retailers may also feel the pinch, as higher costs can lead to reduced sales and slimmer profit margins.
This can lead to a small bump in inflation, which can have a cascading effect on the economy. As prices rise, consumers may cut back on spending, which can slow down economic growth. Businesses might face higher operating costs, leading to potential layoffs or reduced investment in new projects. Inflation can also impact savings, as the value of money decreases over time, which means prices for everyday things might go up a little. From groceries to clothing, the cost of living can increase, putting a strain on household budgets. Families might find it harder to make ends meet, and the overall standard of living could decline. This is why managing inflation is a critical task for policymakers and economists.
The government will have to keep an eye on this. Monitoring inflation and taking proactive measures to control it is essential. This could involve adjusting interest rates, implementing fiscal policies, or even intervening in the currency markets. Government officials and financial experts work tirelessly to ensure that inflation remains within manageable levels, balancing the needs of the economy with the well-being of its citizens. And find ways to control inflation if it starts to get too high. Strategies might include tightening monetary policy or introducing subsidies for essential goods. The goal is to maintain economic stability while fostering growth. It's a delicate balancing act, requiring constant vigilance and timely interventions. By understanding the dynamics of a weaker rupee and its impact on inflation, we can better appreciate the complexities of economic management. The truth is, nobody has a crystal ball. We don't know for sure what will happen to the rupee if Trump returns. It's a complex issue with lots of moving parts.
But here's the good news. India is a lot stronger than it used to be. We've got a diversified economy and a strong central bank. We're better prepared to handle whatever comes our way.
So how do we deal with this uncertainty? One word: diversification. We can't just rely on a few countries for trade.
We need to expand our reach and find new markets for our products. This will make us less vulnerable to the ups and downs of any one particular currency or economy. Think of it like this. Don't put all your eggs in one basket.
Another important strategy is to focus on Make in India. This means making more things here at home instead of relying on imports.
This will create jobs, reduce our dependence on other countries, and make us less vulnerable to currency fluctuations. It's a win-win situation.
The bottom line is this: we can't control everything that happens in the world, but we can control how we react. By taking proactive steps, we can turn challenges into opportunities. The government can play a key role by creating policies that encourage exports, attract foreign investment, and promote domestic manufacturing. Together, we can build a stronger and more resilient India.